Good morning and welcome back to the Atlantic Council live from the IMF World Bank annual meetings here in Marrakesh, Morocco. This morning we are launching a new report, the Bretton Woods Institutions in an Era of Geopolitical Fragmentation, written by Martin Muhleisen. We're going to dive into the report now. We have an expert panel to unpack it. So let's go ahead and get started. I'm really excited to introduce Martin Muhleisen, former Director of Strategy, Policy and Review at the IMF, Senior Fellow with us at the Atlantic Council. Mark Sobel, U.S. Chairman at OMFIF, former Deputy Assistant Secretary of Treasury, USED to the IMF, and Sienna Norquist, Bretton Woods 2.0 Fellow with us at the Atlantic Council. Martin, I'm going to start with the Q&A. We're going to do a couple minutes, unpack the key themes of the report, which everyone can read now, and then Mark and Sienna, I'm going to turn to you for some reaction, and we'll get questions as we go along. So Martin, let me just start. The premise of this report is about how the Bretton Woods Institution should navigate this new era we're in. But before we get into your policy recommendations, which I think are very useful and a bit provocative, what is the status of the Bretton Woods Institutions as they stand today?
Well, thanks, Josh, for the introduction. The status of the Bretton Woods Institution. In my view, both the World Bank and the IMF have lost influence in the recent years, which comes from a variety of factors. As far as the IMF is concerned, there has been not a lot of demand from large countries for their loans. The emerging markets, the large emerging markets, have gotten surprisingly well through the COVID crisis and other periods of volatility. Instead, the IMF lending has shifted quite a lot to smaller countries, developing countries that are still in need of large external funding. And of course, there's been some demand from some large countries with very weak economies, but these were repeat customers. And the problem that the fund has is that countries like Argentina, Egypt, Pakistan and the like, they seem to be always having to come back because they haven't gotten their problems fixed. And the quality of the programs that are being undertaken is not sufficient to get these countries out of that cycle. And in fact, one of the premises for the IMF's lending is that one should kind of address the problems at heart. Same with developing countries. I mean, debt has been going up, but the IMF has kind of tried its best. It has tried many programs. But again, these problems don't seem to be fixable. So the fund has been caught in more and more lending to countries with difficult problems over long times, rather than the short-term lending that they were supposed to do. The additional problem that the fund has is that China is kind of emerging, or has emerged, as a really huge lender that has provided money.
Now we get to the core of the issue.
Well, has provided money at very different conditions, less conditions for economic reform, but more seeking more concessions of a strategic nature. And of course, we're now in a situation where China has been de facto blocking IMF loans for a couple of years already in some cases, because of the inability of the fund to lend if that is not sustainable. And there has been progress, one has to also concede, but it's been very slow. We're now seeing Zambia finally, after I think 3 years, emerging from the common framework. And it may speed up a little bit, but de facto China has played a big role in the IMF not being able to help certain countries. Now, there has been kind of some shift of the perspective of the IMF and World Bank, saying, well, if we can't do so much lending of our traditional nature, maybe we should focus more on climate. And I should say, of course, for the World Bank, this is an essential field. I mean, the bank has been accused basically of not being able to help with with getting countries out of poverty, so like a broader mission failure, if you want. So there's been a lot of discussion lately, and rightly so, that developing countries especially need help with development and climate, and bringing in larger financing is an important part of that.
So if we think about what you're saying on the climate, this has been a pivot from the IMF, not really complementing core mission of the fund. Is that fair?
So, of course, they're still doing their core mission. I mean, I shouldn't exaggerate, there are programs that have been useful for countries, mostly smaller countries. There's been a lot of lending during COVID, mostly free of conditions. Mm-hmm. But yes, the IMF is not the kind of global provider of finance anymore, because there's been the private sector and there's been China emerging, almost competing with the IMF in some sense. And now the issue is, if the fund wants to help countries kind of with climate projects, as they do with their latest loan facility, the RST, then are they still capable of doing the other jobs, namely ensuring that loans are being put to good use and that they're being repaid? And with a lot of countries already suffering from debt distress, it creates a bit of a conflict of interest for the IMF especially.
And you write in the paper, and I encourage everyone to look at this, that the U.S. and other Western partners may have sort of ignored the fund for too long in a way and not used it to the full extent of its capabilities, and they do that at their own peril. So what do you propose then going forward?
Yeah, so in my view, shareholders have probably relied too long on the IMF as a source of just financing, but they have contributed, in my view, to not solving some of the problems, especially with the larger countries that came to the IMF. I mentioned that there's all these repeat programs. There is now a threat of default even in Argentina. And I would kind of suggest that part of the problem is that shareholders have not helped the IMF in convincing countries that they need to do the right policy reforms. Instead, I think the short-term kind of objective was to keep the countries afloat. But by not addressing the real underlying problems, we're getting into a really bad cycle where it becomes more and more difficult to justify lending to large countries that have problems. And that in turn creates A, financial difficulties for the IMF potentially, if there's a default, and B, it also undermines the incentives for other countries to go along with the IMF conditionality, because they would say, well, look at what you're doing in these other cases, and by the way, we haven't talked about that yet, we are also not properly represented at the board of the IMF anymore, because there has been no reallocation of quota, and the large shareholders, the US and Europe, still are way over represented at the board. So the business model of the IMF is kind of being slowly and gradually questioned, and I'm just concerned that if there's now a large wave of climate lending on top of everything, that we will see some more debt problems and repayment problems down the road.
So let me just ask one question before I get to Mark and the reaction. You're suggesting in the paper, and you use the Ukraine program as a model here, more of that type of lending, and you use the word plurilateral, which we usually use in the trade context, not in the IMF context.
So that really comes back to the fragmentation part. In my view, there is a systemic competition between the West, as we call it, and China. One needs to kind of take on that competition. China is trying to gain influence at all international institutions. They've managed to get quite a few committee chairmanships at the UN, for example, of other agencies. They've been implicitly making it more difficult for the IMF to lend. And what I'm saying in the paper is that it would kind of be almost foolish to now give China a larger share at the IMF, because that would put China and other countries in a better position to block important lending, not lending decisions, but important architectural changes that may be needed to keep certain countries that are of geopolitical interest for the West in programs. You mentioned Ukraine, that's a key example. There had to be a certain change in the lending rules to allow for guarantees being provided by large shareholders. And this was the only way that the fund could lend to Ukraine. And I think it was absolutely the right thing for the IMF to do. But if we're going down the road seeing a major increase in shareholders that are not aligned with these geopolitical interests, then the IMF could be blocked, and a lot of the money and expertise that went into the IMF over the past decades would in a sense be neutralized, and that would be a geopolitical victory for China, in my view, and a loss of an important asset for the Western coalition.
So this is a provocative point, and Mark, I want to turn to you for your reaction, because what Martin's suggesting here, and I understand about Ukraine is an example and the right thing to do, but there's a risk of that approach. There's a risk of fragmenting the IMF further, and the non-G7 or non-Western shareholders then react and detach themselves more from the fund. How do you see it?
Well, thank you for having me, and I thank Martin for a great paper. So in essence, Martin's proposing, I guess, Western shareholders be more influential in backing the IFIs to support them. To me, the IFIs are extremely valuable pillars of the global governance system, and they've supported the world's economic successes over the past decades. And I, having been kind of the IMF manager at Treasury for a long time, believe that many countries, including my own, have treated the fund and the bank as underappreciated assets. If I could be philosophical, and I say this having worked in the IMF and the board, I think that people on the staffs at times have this vision of global governance led by technocratic expertise. To me, these are shareholder institutions, countries have national interests. Of course, the U.S. used as influence in the IMF. Much more is made of that than is reality. But if we didn't care about the IMF, it wouldn't be relevant. I think Martin draws two stark contrasts for my taste, but he and I talked about these issues for 20 years, so he's not going to be surprised if I say he's overdoing it. So the first point in that regard is to say that this vision of technocratic versus national interests, they are not antithetical. The U.S. has been a consistent supporter of the IMF in reaching multilateral solutions. So basically we support IMF TA, we support IMF surveillance, we are huge supporters of the IMF's first responder role in global crises. That's the first phone call that gets made. You see that in the Latin crises of the 80s, you see that in the Mexico crisis in the 90s, you see it in the Asia crisis, breakup of the former Soviet Union and whatnot. So the U.S. Huge backer of the IMF. Now, then you can get down a little more granular and start debating and whatnot. So the U.S. should provide more money for LICs. I absolutely believe that. I think we've been very deficient in that regard. We should provide more co-financing at times. So you mentioned Ukraine. I think Ukraine was sui generis, but I totally agree with you. I think that was a good case where we needed to provide the further assurances and the backing. Getting money out of Congress for the kinds of proposals you have, if you had had my jobs and had to go do that, you might be more modest in some of the things you say. You mentioned share realignment as an issue. I have to push back on you a little bit because the United States led the push for a shift of 10 percentage points in shares to emerging markets as a whole between 2006 and 2010 in the deals. Bush and the Obama administrations were strongly supportive of that. And then another pushback I have to just do for as a good Treasury American person is that the IMF's quota formula is a joke, and the only metric by which the U.S. is underrepresented in the fund is this illegitimate, ridiculous formula. We're 25% of the global economy, we're 16.5% of the IMF's voting power. The Europeans are overrated, you're absolutely right, but not the U.S. You're right to talk about China and debt. Maybe we'll come back to that. I'd like to see the West pushing more on China, but what leverage does the West have at a time of U.S.-China tensions and at a time when China's the dominant creditor and they're like, why should I play by your rules of the game? China is hugely underweight, and you've legitimately asked whether it deserves more share when it isn't a responsible player on debt. I think it's a totally fair question. I don't think the U.S. could support China regardless, even if it behaved well. One other comment on your paper, and then I'll end and we can move on. You kind of view the G7 and the G20, I think, as a bit rivals of the IFIs. Maybe that's not fair, but to me they're complements. The IMF is plays a very heavy role in guiding the institutions. And on climate, just to say, yes, it's the world's biggest challenge. The world is flailing as far as I'm concerned. There's a huge IFI role consistent with their mandates. I agree with you there. And I think we really need it. So my final comment is we need to get further behind the IFIs. We need to pony up more.
And Martin, I'll come back to you in a minute so you can respond and say, and I'll come to you in 1 second. But Mark, one follow-up to that. What would you say to the criticism on the Ukraine program that you changed the rules when it was in Western interest for this particular issue, but you don't apply the same standards in other programs?
So, you know, I kind of have lectures from the Fund Legal Counsel about uniformity of treatment reverberating in my ears. But look, you know, what is it? Well, my plane landed in Casablanca. I'm shocked. There's politics in the IMF. So, yeah, as I said, there are times when people exert influence, and that's a fact of life. I have no qualms whatsoever with what the fund is doing in Ukraine. I think it took them way too long to get there, but once they got there, I think it's good. I have no problems. It was absolutely right for the G7 to provide comfort. Look, the fund has been relevant because it's always adapted and to changes in the global economy, and it's been flexible in doing so. And if we'd always stuck rigidly to whatever rules, you know, I think the world would be a lot better off. We would never have overcome the debt crises, and whatnot. So that's life in a big city.
Point well taken, and we've talked about this a lot, Martin. The fund has been, as you said, Mark, a flexible institution over time. I don't think it gets enough credit for that in its history, so noted. Sienna, I want to come to you, building on this conversation, the legitimacy point. Take what Martin said, take what Mark said, understood all the reasons it needs to be done, but long-term legitimacy for the institutions, can it be maintained if these kind of policies continue?
Yeah, well, first, thank you so much, Josh, for having me on this very distinguished panel. As someone early in my career, it means a lot to be sitting next to these two gentlemen. And Martin, thanks so much for your report and for trusting me to kind of give some thoughts and recommendations. So I'll try to keep my answer simple because I think simple answers are often the best ones. So my answer is yes, absolutely. There needs to be reform of the voting rights and the quota shares in order for the IMF to retain its legitimacy. Legitimacy is rooted in power and this idea of who has the right to power. And that also relies itself on public opinion. So that means at the end of the day, do people who then elect officials or have officials that theoretically represent them in these institutions feel like the IMF is responsive to their needs? In my own research that I'm doing with the Atlantic Council with Joel Christoph, we're taking more of a historical approach to try and understand how have the vote shares changed over time. Like Martin, we find that Europe is heavily overrepresented. It's been overrepresented for a long time. Mark is correct that the US is not technically overrepresented, although it was historically in the past. But what we do find is that it's really the upper middle income countries that have seen a decline in their vote shares over time. So these aren't the countries that are trying to turn to China to get out of their debt distress, but these are countries that are more likely to vote with Russia or China or abstain in the UN system. So getting back to your larger point about how is geopolitical fragmentation affecting multiple institutions at the same time, it's these countries that have had a reduction in their income country share, vote shares over time, that are not feeling represented. So when it gets to the heart of the IMF and what we need to look at, there's really good research by DeVries, Hobalt, and Walters that looks at the fact that to get from a permissive consensus in an international organization to democratically legitimate international cooperation, what you need is the ability to challenge the international organization itself. And that means that we need to have this reform. So every 5 years, the IMF is supposed to undertake what's called the general reviews of quotas, which you, of course, discussed in your report. There has not been a change in the vote shares since 2010. Even though there are expectations that it would change in 2016 and now at the end of this year in 2023. So all these countries really need to get on board to have some changes because I think the institution will lose a lot of legitimacy if once again there's a stalemate after 13 years of no changes. I also think the United States has a moral responsibility to really push for this reform. So with great power comes great responsibility. We're the one with the veto power. The US is the one with the highest vote shares currently. So as Mark said, I think like in 2010, we need to be pushing for these lower and middle income countries to get the vote shares they need so that citizens around the world feel like they're represented in these organizations, and happy to hear your thoughts, Martin, as well.
So Martin, let me give you a chance to respond to all that, and let's talk about quotas. Let's talk about it, because take what Sienna said, take the legitimacy point, but the reality here on the ground is that is not what's likely to happen. That is not the outcome we're headed to. Make it an announcement in a day or two that there's progress being made. So the difference between what the institution maybe should do for its long-term health versus what we'll see in the coming weeks and months.
Look, both Mark and I, and maybe you in the future, are committed multilateralists. I've had a little part in kind of making sure that the quota change that Mark was referring to got in the end implemented. It was quite a process, including getting it through US Congress. So we were all proud of that, I think. But let me take you back to the famous UN vote at the beginning of the Ukraine invasion. There were a lot of countries siding with, or not siding with, but at least refraining from voting against that invasion. When you do a little exercise that I did in the paper, if you translate the amount of countries that did not speak out against the Russian invasion and you translate it into IMF capital shares and votes, I think you get close to 15%, which is the veto against strategic decisions by the IMF Board of Governors, which the US has. It has more than 15%.
And any other grouping of countries
and
that
of
can
course.
get to 50%.
But my point is here that I'm not suggesting that this coalition will vote the same way in the IMF, of course not. But it is a kind of a marker that you have that geopolitical fragmentation that could be seen at some point at the IMF board, especially if you increase the share of countries like China that are geopolitical competitors. So I fully agree that eventually we will need to get that allocation of votes to a point where everybody can say they're properly represented. But right now, I don't see the time for it. And maybe in the future when China plays a more constructive role, and maybe there's also a bit more reflection that maybe we shouldn't really talk about de-risking and decoupling because it's in everybody's interest to have sound economic relations. But right now, I think it would be naive to try and give that control away. Now, Jay Shambo in his speech the other day on the IMF had an idea that I'm going to say I developed independently because the paper was already in draft back then. But I mean, it's the same thinking. If you can't give a quota increase, what else can you do to ensure better representation of countries that don't feel appreciated? And I think a third chair for Africa is almost like a no-brainer. One could do more. One could think also of the US and Europe, despite all the politics, maybe agreeing on a candidate that is the best suited for the job, rather than finding always someone who somehow fits the calculus of whose turn is it and from what
in a year from
region
now?
does that person come. And then also one could do more, for example, to just engage countries by doing these wonderful annual meetings here that we have in Morocco, more often in countries that are otherwise not so much having a say at the IMF. So I think there are ways to show that these countries are appreciated, but I think hard voting rearrangement is not the time right now.
So, Mark, your response to that, because a little bit what I think I'm hearing from Martin is it's damned if you do, damned if you don't. Because, okay, understood, take his point. You increase the voting share, you're rewarding this behavior. China's blocking of debt reform, that you don't want to give more voting share under this current circumstance. On the other hand, you don't do the reform and you might solidify that current 15% group to be more aligned in an anti-Western position than you would otherwise.
So, I think with more I think Martin and I are in agreement. With more share would come more responsibility. So you have to show that you're responsible.
So that has to come first, basically.
Or hand in hand.
Yeah.
So I agree. I mean, China's been truculent on debt issues, and in the Treasury's view, China's been a problem in lacking transparency on FX practices, and China should be a better player. Now, I wrote in 2018 that China should do a deal with the U.S. on China behave on debt U.S. supports more share. I would say I think that's a good vision, but I would say U.S. politics right now wouldn't even allow such a thing, I think that's unfair. I think very much of representation in the fund, like what's your GDP weight, what's your role in the fund. It's a little bit simplistic, but so I think there's much more voice about who is underrepresented than there is the reality of it. When I look at the reality of who's underrepresented in the fund, I can say Indonesia, India, Vietnam, China, and I don't get much farther than that. So in any case, I think it's unfair to some of the Indias, the Indonesias, and whatnot of the world that they're going to get hung up on this U.S.-China problem, but that's life in the big city.
What about Martin's point about some of the failures of lending programs and that undermining legitimacy? Egypt, Argentina, he brought up a few well-known examples. I mean, we're going to come up to another Argentina issue here now with the election.
Conditionality is hard. It's people are always going to yell about it. So I guess Martin and I basically, I think, agree. So basically, the IMF gives a program. There's always going to be howling and screaming about the program, but you need to think about, basically the IMF's trying to help the country get onto a more orderly adjustment path, provide a little bit of breathing room for that process, rather than the country having to go cold turkey and slash everything and go to the tank. And everybody yells at the IMF promoting austerity, but in fact it's trying to, you have to look at it in terms of the unknowable counterfactual. They're trying to provide a more orderly path. So basically, countries need to deliver on programs for their own good. But life is tough in the big city when countries have politics and whatnot. And so it becomes tough for the IMF, right? You start a program with the country and then it doesn't perform. So what do? Do you go back in and try and put Humpty Dumpty back together again? Or do you say, you are on your own? And the fund has basically, in the past, tried to put Humpty Dumpty back together again. And what's happened is that some countries have become wards of the IMF. And since I'm no longer a diplomat in the government, I can say, Argentina and Egypt and Sri Lanka and Pakistan, and I won't suffer the consequences for it anymore. So my point is that, there's politics in the IMF, but I think the amount of perception in the public mindset is exaggerated. At this point, I'm with Martin. I think, and I was long ago there on Pakistan, I think the IMF needs to basically say, especially with Argentina right now, okay, here's our bar. It's a high bar. You're going to get your house in order. We're not going to continue to subsidize the same field policies we have for 20 years. And so you either cross the bar and we'll support you, or otherwise we're going to cut you loose. And the problem is that Argentina may go into arrears, and that's going to have a really bad financial impact on the fund and political collateral damage. But that's kind of where I am now. There gets to be a point where the fund should not be supporting for decades a kind of what I always call the low growth equilibrium trap.
Yeah. Have to draw the line at this point. Okay. Sienna, I want to come to you on this delineation that Martin brought up about climate. We talked about it a lot. We talked about Nadia Calvino. A lot of the meetings here about role of the bank, role of the fund, who owns climate, IMF's increasing work on climate. And after we do this, I'm going to talk about Jay Shambaugh's speech with everybody. But Sienna, first to you.
Sure. So first I would say that the IMF obviously needs to stick to its mandate, so it primarily needs to be concerned with preserving financial stability in the international financial system and the international global market. It can also work with other multilateral development banks, so EBRD has a specialization in energy transition and the green transition, so that's of course something they can work on together in order to address climate. I will respectfully disagree with Martin a little bit on his vast criticism both of the climate focus of the IMF and also of the Resilience and Sustainability Trust, the RST. I'll be honest, I don't know enough about the incentives and the mechanisms behind the RST. You're, of course, criticizing whether or not it really is incentivizing these countries to become more sustainable. I think another way in which the IMF could both return to its normal mandate as well as still focus on climate is to make sure that if it is imposing conditionality, or if it is recommending austerity for client countries, that there are carve-outs for things like climate funding and healthcare funding. So we saw in the pandemic that many emerging market economies and former client countries were unprepared to respond to the COVID pandemic. And I think it is legitimate to criticize was some of this underfunding and underprovision of public services because of years of austerity and some of the conditionality mechanisms that the IMF were imposing. Of course, this would require a very strategic and targeted approach. So you would need not just economists, but also I think climate scientists in the IMF saying, okay, how can we design a really good package that will also ensure that there is long-term financing for these climate changes, for the climate transition, but also for infrastructure as well. We really don't have any time to lose on infrastructure funding and financing, as we saw in Turkey recently with the earthquake. Of course, that's not necessarily climate change, but so many people died because the infrastructure was insufficient. And so we need to ensure that infrastructure funding can go on for long terms. It can go beyond the electoral cycle and the pork-barrel politics that is often involved in democratic elections. But essentially, the IMF needs to stick to its mandate, but every international organization needs to get on board with climate change because it's the biggest threat we have to financial and economic stability in the long run. And the fund can take a climate-centered approach to the conditionality mechanisms that it applies. And as you say, it should reevaluate the RST, but try to keep that a part of its mandate.
So Martin, I'll let you respond to what was just said by Mark and Sienna, but I want to frame, and this is our final round to go across, under the response to Jay Shambaugh's speech, because I think Undersecretary Shambaugh took a bit of a different position from Sienna on this, and I read the speech, I think as many did, as a sort of back to basics, too many hiring of climate economists, too much focus, and we have now a World Bank president from a U.S. perspective who will prioritize climate, and so we can delineate more. But how do you see it?
So on that one first, the IMF has a role in climate. It's on economic surveillance, it's in understanding the risks, it's in understanding how to do that sustainability analysis, it's also in how to manage and kind of allocate public expenditure for that. There's very important macro level roles the IMF can play on climate, so I don't want to be misunderstood. My concern is that the RST, as it is created, conflicts a huge conflict of interest for the fund because it has to have an IMF program along with it. And if you want to disburse the money, well, I mean, the conditionality on that program also needs to be observed. And, you know, there will be in the future some mission chiefs that get really into trouble if they say, well, you know, maybe we should wait before you fix your deficit or whatever. At the same time, there is pressure from stakeholders and management to get the RST money allocated, and it's not needed. It's also stuffing all the channels at the IMF. People are busy with paperwork, and it just doesn't make sense given all the priorities that the IMF has. So I'm advocating at the next opportunity for a review, at the review to take the pot of money and move it over to the bank or MDBs, not to have it disappear, of course not, but have the IMF do what it's supposed to do along the lines of Shambaugh, make sure the macro conditions are right. Nobody's talking about the macro implications of a lot of funding flowing into poor countries. What's going to do it to the exchange rate? What about price level? What about governance? So there's a lot of work that needs to be done, and the fund needs to have the time to do it. On Ukraine and lending, I think the Ukraine program provided a great example for a geopolitical use of the IMF. It's within the set of laws of the IMF. It's consistent with the Articles of Agreement. The only change needed was to say, well, the IMF cannot do conditionality on military outcomes, obviously.
Yeah.
So there are risks that cannot be covered by IMF conditionality. So that's where the shareholders come in and say, well, we're here to back up these risks.
Yeah.
But within that framework, the IMF does what it always does. It looks at budget outcomes and it looks at governance, very importantly, and other macroeconomic variables. And in my view, this was a great way of doing it. And supporting important geopolitical partners in that context should be an aim for the G7 and democratic allies of the US in the future too. There may be other countries that need that kind of support. And if there is, in addition to the IMF program, say preferences, trade preferences, additional financing, blue dot money, or whatever sources can be used to convince countries to do the right reforms, then we're back to the traditional model of money against reforms. That's my thesis, kind of.
So Mark, I want to turn to you on Shambhaw's speech. You've been on the other side of this in Treasury. I was really interested by the speech, the timing of it, the substance of it. We haven't heard that much detail from a senior U.S. Treasury official on the fund. How did you read, not just on climate, but the whole critique of the IMF, if you felt it was, from Treasury and their vision of what they want the IMF to be going forward?
I thought it was a very interesting speech. I could see the hand of some of my former colleagues in it, and I have a feeling my former colleagues and Martin were pretty happy with that speech. I think now, Jay was only confirmed earlier this year, and there is the pressure to have some kind of quota solution by the end of the year. Everybody's talking about MDB reform, and so I think it was a void that needed to be filled, and the timing was right with the quota pressure. That's where I think on the timing of it all. So I thought there are various components, pieces of the speech. I thought the conditionality discussion was quite interesting. So he focused on this ward of the IMF issue, I thought, and as I wrote in a piece, the unspoken word in his speech was Argentina. Mm-hmm. But I think it also applies to the Pakistans and the Egypts of the world. And he basically said, fund needs to focus more squarely on its macroeconomic tasks. It needs to walk away from countries if needed. It should not be endorsing repeat programs, prolonged use in the terminology of the fund, and that the fund needs to leave countries better off, which so I think that's sensible. I think it was basically saying, fund, you've been too lax in some of these ward cases. You need to toughen up. The one comment I would have is that, going back to my Casablanca remarks, is that there are times politics enter the equation. And so whether the vision will carry the day or how firmly it will be applied when push comes to shove, we will see. So on climate change, I thought that was interesting. I think that was also kind of saying to the IMF, let's pull back. I'm not going to debate the RST because it's already there. I would say that if you're a small island economy and in 10 years you're going to be underwater, you should be including budgetary measures on climate in your budget, and the financing should be there. So I see an IMF role there dealing with bounce payment strains.
Is there,
and I see, as you do, the macroeconomic role for the fund. And again, I think with the World Bank should be picking up the lion's share. Now, people make the argument, well, a year ago the bank was under different management and they weren't really carrying through with climate, and therefore that put more weight on the shoulders of the IMF. There was recently this kind of collaboration agreement between the fund and the bank on climate, so perhaps that will establish kind of a new modus vivendi that is more to Martin's liking in the spirit of Jay Shambhaw's speech, which I have a feeling you like on climate as well. And then we discussed China and the quota share increase, and again, so therefore Jay points out that China is behaving badly on debt and FX, and plus he's got politics in the back of his mind. He knows Congress won't approve anything that's helping China get more of a share increase, voila, the equity proportional issue. But that's where that whole issue is. But he came out and addressed the issue and addressed this issue that we've had for many, many years about where's the deal going to be by the end of this year. And then I did think a little bit about, I just want to comment on Treasury more generally on climate finance and the MDBs, because we discussed this a little bit earlier. And so I think, the U.S. view is balance sheet optimization is good, guarantees, et cetera, to expand the lending is good. I think Treasury does work with partner countries to incentivize them to do well. And that also goes for the IMF. We spend a lot of time in bilats telling countries, go to the IMF and do what the IMF says. So, but I think climate's a huge challenge. I'm not sure that the amount of money anybody's putting on the table yet suffices to deal with the problem, let alone our policies where we don't have a carbon tax, et cetera. So, so it's good that the IFIs are involved in climate. They should do so consistent with their mandates. Whether it's enough is another question for many years for you to debate, Josh.
Yeah, and we will continue to debate it. So, Sian, I'll give you the final word. We have a minute left. Your first IMF World Bank meetings, these annual meetings in Marrakesh, your impressions so far?
Yeah, so my impression has been really great. I feel like I've learned so much. I had the great opportunity to meet some of the IMF Youth Fellows the other day and present some of our preliminary research work on governance reforms to the Bretton Woods Institutions. And it was great to see how enthusiastic they were. They were pushing back. They were giving us their own recommendations, saying what they think would and would not work for their own countries, many of which are emerging market economies. So I think the optimism from the young people here is great and hopefully will drive some of these governance reforms. Multilateralism and the word trust have been thrown around a lot, and I think it's good that the word multilateralism is being used, although I'm not so sure that the US and Chinese officials agree on what multilateralism looks like in practice. But I think it's good that these conversations are happening. It's good that there is pressure for the quota reform to be concluded in December and for hopefully there to be some concrete changes that do result in voting reform at the end of the day.
Sienna, thank you. And Mark, thank you. And a final alibi.
And
Martin.
if there are no changes, we'll always have Marrakesh.
We'll be back at the meetings, not Marrakesh, but somewhere else soon. As you said, more meetings on the road, so that's an interesting suggestion. We'll have to think about that. Thank you all for joining today. I know it's a very busy schedule for everyone. I appreciate it. Martin, congrats on the launch of the paper. Encourage everyone to read it. We will share it widely. The good news is we can discuss your proposals and your suggestions on Ukraine with Ukraine's finance minister in about 45 minutes from now. Sergei Marchenko, finance minister of Ukraine, will join us right here. So stay with us here at the Atlantic Council live from the IMF World Bank meetings in Marrakesh.